In this video, we talk stocks. Welcome back to another episode of Gulf Coast Investing, where we talk about all things investing right here on the Gulf Coast. My name is Casey, and I love if you would like this video and consider subscribing to my channel for more great content just like this one. So I did a video a couple months ago, and I talked about stocks, some stock picks, the 2023 stock market, and kind of some different things like that. And one thing that I mentioned was ETFs. So ETF is an exchange traded fund. And I had some questions and people that wanted to know a little bit more about ETFs and stocks and all that. So I will first say I am no financial advisor. This is not financial advice. I know maybe just slightly more than you do, but probably even less than you do and things like that. So it's just something that I have recently in the past couple years, and especially the past couple months, really tried to dive into with some people on YouTube and online and things like that to learn more and kind of see what the best is. So I was reading a book, and it was talking about different ETFs and mutual funds, which are pretty much similar, the same similar type thing that you can buy in the stock market. Bought a lot of different ETFs myself. Wanted to kind of break down what my top three so far favorite ETFs have been. And then, get your thoughts of if you like ETFs, what you buy, and things like that. The big difference in an ETF and just an individual stock is one. So I could go buy, Apple or Disney or Microsoft or Home Depot. Those are just all individual stocks. So if I buy, one share for $300, I'll hold that stock. If it goes up, my money goes up. If it goes down, my money goes down. Problem is that you're throwing all your eggs into one basket, or you're trying to handpick some of your favorite stocks, and just like me, you're not a stock expert, so you're not paying attention to market trends and what's going on and things like that. All of a sudden, when we had COVID and everybody was online, you had Zoom. That went way up because everybody needed to get on, have video conferencing and stuff like that. As soon as everybody went back to work, Zoom went way back down because obviously it was not needed anymore. So are you watching those trends? Do you know when to buy? Do you know when to sell? Do you have time to do all that? Probably not. You're probably not just sitting around your computer all day doing market research for yourself and trading. So that is why an ETF is so great, because an ETF is doing all of that work for you. They are taking some of the best companies in all different sectors, which we'll talk about, and they are saying, hey, here's the best. They're buying them, they're selling them, and they're holding them. All you have to do is click buy that ETF, and then they're doing all the rest for you. They charge a very low fee to manage it and come up with the best solutions and the best products for you. All you do, buy it, set it, forget it. They're worrying about, hey, here's the best companies, we're going to get rid of these companies and things like that. So that's why I think the easiest thing, instead of you buying and selling and doing all these little things, buy some ETFs, let it sit there, let the money just compound year over year. And that's the best way to get into the stock market, and especially if you don't have all the time on your hands to do all the market research. So I wanted to come on here and talk about three of my most favorite ETFs that I currently hold in my stock trading account. Get your thoughts on those and maybe see what you have as well. So the first one is VOO. So VOO. So VOO is a ETF that is tracking with the S&P 500. So again, you have the whole stock market has thousands of different stocks and companies in it. And the S&P 500 is taking the top best 500 companies that there are, and it's always trading out. So number 499 yesterday is probably different than number 499 company, 2 days from now, or 2 weeks from now, 2 years from now. They're automatically, they're always saying, hey, what's the best stocks? Let's get them all switched out. So you can't buy the S&P 500 itself, but you can buy ETFs that mirror the S&P 500, and they buy a lot of the similar stocks that are in the S&P 500. So VOO is one of those. To me, it's offered by Vanguard, but you can buy it on Robinhood or E-Trade or any of those trading sites. You can buy this ETF. And again, it's going to literally track with the S&P 500, so you're not doing anything. You don't have to go research what are the best 500 stocks today, and are they the best 500 stocks 2 weeks from now and 2 years from now and all that. It's doing it all for you. So it's going to track the S&P 500. It's going to automatically do all that work. You just buy and forget it. It has statistically and historically been one of the best ETFs to have as far as its return and its value year over year, because again, it's tracking the best companies and it's keeping track with all those. So the next one is a fund that is getting a lot of views online and on YouTube and things like that, and that is SCHD. So it's provided by Schwab, so that's Schwab. That's the S, and SCHD, just like VU, the V in VU is Vanguard. So Schwab is another. They have this ETF, and it's a high yield ETF, a high dividend yield ETF. So when you buy a stock, ones like I mentioned earlier, like Disney and Home Depot and stuff like that, some different stocks offer dividends. So they essentially say, hey, for every one share that you own, I'm going to pay out $2 per share to the stockholders every year. So when you have these dividends, obviously some of the goal of that is, your retirement portfolio has these dividends in it. You're getting paid quarterly, you reinvest those dividends, and not only is the stock price going up, but you're also getting paid quarterly. Some pay monthly, these dividends. You take that money and you can just reinvest it, and that's another way to build your stock portfolio. So SCHD is a high yield dividend account. So they not only take some of the best stocks, but they also take some of the best historical stocks that pay the best dividends. So this stock also, it's an ETF, but it's also going to pay you a dividend. It's somewhere around 3.5% at, right now. It's going to go up and down depending on what the market's doing. So not only is it going up in share price and things like that, it's also much cheaper than VU to get in. VU's sitting close to $500. SCHD's around $80. That you can buy a stock, that you can buy the stock and you're getting that dividend. So it's a little bit newer than VU, but again, I like it because it has a lot of growth potential and you can actually get a lot of income from those dividends. And then, like I said, I'd take those dividends and reinvest them when you get paid every quarter. Reinvest them, keep it going, buy more shares, and it just keeps the snowball effect. So really cool when you look at the snowball effect, especially with buying stocks with dividends. You look at a year from now, 2 years from now, 5 years from now, 10 years from now, the growth is just slowly going. But by the time you hit the 20-year mark, the 30-year mark, and the 40-year mark, it is incredible the snowball effect that these stocks, these ETFs, and especially the ones that have dividends are producing for you year after year if you just keep investing those stocks. So VU is the first one. SCHD is the next one. The third one that I want to talk about is one that I have just added, and it's QQQM. So you've probably seen, if you watch any type of TV or any type of commercials on the phones or on YouTube, anything like that, Invesco QQQ. So QQQM is kind of a subset. It kind of mirrors QQQ, but it's a little bit newer of a stock, of an ETF stock, and it's also a lot cheaper than its parent QQQ. So I like QQQ. For the M, it has about 50% of what they buy. Again, ETFs are not individual stocks. They buy a ton of stocks, and you can look up when you go to Robinhood to buy a stock, it'll show you the different sectors of real estate. So, or the different sectors that it has. One of them is real estate, but is this technology? Is this real estate sector? Is this education sector? Is this healthcare sector? It'll show all those, and of course some of those are weighted depending on what sector you want to be in. Well, pretty much one of the hottest sectors right now is technology. So QQQM has over 50% of the stocks that they buy and hold in that ETF is technology. So it's in that technology sector. That's one reason why I like it so much, because the technology sector has been blowing up, especially recently. I think it's going to be one of the biggest sectors going forward. I think technology and real estate are going to be huge. So it holds that technology as over 50%. So that's why I really like that one. Like I said, it's a lot cheaper to get into. So like I said, those are three of my favorite ones right now. Of my Robinhood portfolio, I would say probably 80% of the funds that I own go into those three. I also have one called VTI. So VTI is similar to VU, where VU has the S&P 500 and is tracking that. VTI is another one provided by Vanguard, and it's literally tracking the entire stock market itself and it's buying and selling some of the best companies that are in the entire stock market. VOO is having some of the best inside the S&P 500. So that's some of the difference, but that's another one that I like, and things like that as well. But there is so much research. There's so many people on YouTube. What I like to do is not take one person's advice, not take one video like this and go start buying things, but I will literally go watch 5, 6, 7 different people, see what they have, see what they hold. I will write it down, and then I'll kind of see, okay, 7 out of 7 have this stock. 5 out of 7 have this stock. Only one person mentioned this one, so I don't want to do that one until I get some more information, research. Make sure you're always doing your own research. But I like getting as many opinions as possible as I can, so I would recommend that for sure. But like I said, of the ones that I've watched and seen, I probably follow about 10 different stock channels. I would say pretty much everybody that I've seen has VOO. Most people, if not everybody, have SCHD, and more people are getting QQQM just because it's a little more versatile. It has a little bit more technology, and it's cheaper than its parent QQQ1. So that's why I put them on here, is because when I'm looking at stuff and I'm doing research, I see those mentioned some of the most of anything. SCHD is one of the hottest new stocks that has been up and coming, so I encourage you to look into that. But I know a lot of people that just have 2 or 3 ETFs. That's all they buy. They're buying and holding. They're holding it till they retire. And I'd say VOO is one of those fundamental stocks that almost everybody has in their portfolio. So I'd encourage you to look into that. So hope that this helped you out some. I hope, especially if you're just starting to get into the stock market or research stocks or things like that, do some research into these. Like I said, look up more things. Let me know if there's one that you love holding on to, especially an ETF that you like having in your portfolio. Would love to see that, so we can check out and do some research on that as well. So hope you have a great week, and we'll see you next video.